So the crypto markets are down and we can see altcoins taking a beating, but I want you to know that there are opportunities to take money from these markets every day. And the first thing we want to keep in mind when approaching these markets are that we want to be neutral in these markets. We don't want to be attached to outcomes. You shouldn't be stressing yourself on, is the price going up? Is the price going down? You want to see what the market is doing today. And based on what the charts are telling you today, you want to form a bias on if there's a higher likelihood for it to go up or to go down in the future. And then you want to make a game plan for if it goes up or if it goes down. Now, on that note, something I want to show you guys here. If we zoom out to the weekly chart on Bitcoin, we can see going all the way back to the end of 2020, a trend line that has a lot of touches. We've seen this trend line act as strong support and resistance since November 2020. And if prices were to move back down toward that trend line, we could expect to find some kind of support just around the 50K mark on Bitcoin. And likewise on Ethereum. If prices were to move down on Ethereum, we could see some support form around 2,400. And on Solana, we would see support form around $100, a little under $100. So for a game plan, an example game plan on if I'm anticipating prices to continue down toward that trend line, something you could do, and again, it's not financial advice, you could set up a position to provide liquidity on Uniswap on ETH USDC and set your lower and upper ranges around 3,300 or 3,350 or 3,400, and you could set up your lower bound of that around 2,400. So if prices were to continue moving down toward that trend line, once it enters this price zone, you'd be collecting fees. And as the price action moves closer toward that trend line, your position would be more ETH. And if it were to move out through the bottom of the trend line, your position would be all ETH. And in my ideal scenario, I would cash this out all ETH. And at this point, I would guess that we'd see action hover around that trend line. And guys, this is a weekly chart. So this could play out like we see here, something from the 9th of January until the end of July. So this thing could play out like this for months. So to reiterate, guys, we don't want to attach ourselves to outcomes like a full-on bull run or shorting the market and it going straight down, because rarely do markets act like that. We want to approach the markets with the neutral mindset and just take what it's given us. So in this scenario, if it were to go down toward the trend line, the liquidity position would become all ETH closer toward the trend line, closer toward your lower bound. In this scenario, you could cash out all ETH and move that toward an altcoin ETH pair like Wormhole ETH. And I know this is the Wormhole USD chart, but let's just say that ETH did trend down toward that trend line. We're all ETH. You would want to be looking at getting into a Wormhole ETH liquidity position. And by then, who knows where Wormhole would be, but probably a lot lower. And what you could do is go all Wormhole, set up a liquidity position with the lower and upper bounds above wherever that current price was. So you would buy it, you would provide concentrated liquidity and set the lower bounds above where you bought at and set the upper bound of that concentrated liquidity position somewhere above that. Again, that's just a potential scenario. Ultimately, at the end of the day, guys, what we want to do is, one, you want to protect your capital. You want to protect the bag. Don't take stupid, risky positions. You want to stack consistent wins. You want to collect yield day on day and compound those wins day over day. You're not looking for home runs. Approach these markets like a business. Businesses have systems and processes, so you need to have systems and processes in place for when you open and close positions. You want to collect wins every day, and you want to minimize losses. Providing liquidity on dexes like Uniswap and Radium are great approaches, in my opinion. And again, that's not financial advice, but I've had an ATM business in the past, and we had about 15 to 20 ATM machines in different locations. We would load the machines with cash, and every single time someone would use that machine to withdraw cash, they would pay a fee, and we would collect that fee. So our money would be making money. So this is how you want to approach the crypto market. You want to provide liquidity. That's like putting cash in the ATM machine that you own. These liquidity positions, look at it like you owning little positions in an ATM machine. And every time people transact and do swaps and trades, you're collecting fees. And over time, those wins stack up. And you want those to stack up to a point where you're making $100 a day, $400 a day, whatever tangible goal that is, so that you can be financially free. And the first step is to get to a place where you can pay all your bills comfortably with these little ATM machines. So I hope that's helpful. Let me know what you think in the comments, and I hope you have a great day.